lessor accounting is very different from lessee's accounting. And in this part of IFRS 16, SBR most likely will test your ability to distinguish between finance lease, when risk and rewards are transferred, and operating lease. And the weird thing is that the accounting is not going to be mirrored for the lessee and for the lessor in these two instances when we have operating lease of lessor and normal lease of the lessee. When you are going to talk about it, make sure that you challenge each and every sentence in the scenario. So, for example, if the lease term, for example, says 60 years and the asset's useful life is 70 years, then you are going to say that the lease is for the majority of the useful life, so the customer will effectively enjoy the majority of the benefits of the asset. Make sure that you talk about each and every sentence separately and make sure that you explain what it means. Like, let's say, if the company is required to repurchase the asset at fair value, this means that risk have been transferred since it's the customer who's going to benefit from the changes in fair value. And we need to challenge each and every sentence to get marks. Nobody cares about the right answer. Everybody cares about writing the right ideas. The topic of finance versus operating lease can appear as part of ethics questions. Why? Well, because if it's finance lease, then property, plant, equipment will have to be disposed of. Instead, you are going to recognize lease receivable. But if property, plant, equipment is disposed of, then you are going to have less pledge to use as security for the bank. So it could have been that the company recognized this lease as operating lease and not as a finance lease to be able to receive a bigger amount of loan from the bank. When you are talking about finance leases, make sure that you stress that property, plant, equipment or investment property are going to be disposed of at their carrying amount, not fair value. Mention these words, carrying amount. Because frankly, the difference between lease receivable that you are going to recognize as the present value of future lease receipts and this carrying amount of the disposal of property, plant, equipment or investment property is going to be recorded as part of your P&L. And finally, with the leases, we have sale and leaseback transactions. And they're quite tricky and most likely they will require lots of time investment. So the important thing is, the easiest thing that you can do is to learn that if the control has been transferred, so let's say if this is the customer that gets all of the rights, risks and benefits from this very asset, then lease must be direct. So the asset must be recognized and lease will have to be recognized. If control has not been transferred, if you still have control over this property, plant, equipment or investment property, then there is no lease. It's going to be just the continuing recognizing property, plant, equipment and depreciating it, and also the recognition of a liability in the amount of cash received. So this is quite straightforward. Focus on that. That will take you something like 20 minutes to master. If you want to brush up on the standard and know it very well, then make sure that you also pay attention to what is going to happen if the transaction is at fair value, below fair value or above fair value. But again, the time investment is going to be quite significant. So if you're short in time, go study financial instruments. Go brush up your consolidation. Don't invest in sale and leaseback transaction. But remember that this advice does not guarantee that you will not meet it in your exam. So see you next.